The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 15th, otherwise known as the Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstances of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I am absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can't dial on in. But I'll tell you what you can do. You can send me an email. Send it off to steve@tfnn.com. And inside that subject heading, please put radio show question. Of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on Wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we got a rally going on. We got the Dow up 639 points. The S&P's up 91. NASDAQ 100, 410. 41 points for the Russell. 200 points for the transports, 112 for the semis, 388 points for the NASDAQ Composite, New York Stock Exchange up 2.25. You got gold, that is, that's the XAU. XAU trading a little bit lower out there. That's interesting. With the gold trading up at up $18 at 2,700. Silver is up 76 cents, trading out at 31.10. Light sweet crude trading at 79.07. That's up $1.57. Natural gas 3.996 is the print. It's up about 3 pennies right now. Copper is up 2 pennies per now at 436. What else can we see out here? Not really much. So we've already really looked at, we take a look at using the daily TD9s. We've already taken a look at gold futures. We'll look at those in detail out there. In fact, we should take a look at those in detail. And Apple, it's on the screen. That's got that completed TD9 count bottom. Now, in the case of Apple, what you can see here is there's no profile resistance. There's no profile resistance. This should, on a daily time frame, is what I really should say. And it should be able to make its way up to the 244.25 level. If we look at the weekly time frame chart, it would trade lower for 2 weeks. We can see for the most part near the upper right-hand screen, those red numbers at the very bottom of that panel are telling you the consecutive weeks higher and lower. We can see that for the most part, Apple, after a 2-week move to the downside, at least has 1 week to the upside out there. It is taking on the bottom of its profile, which is at 236.94. Last week it closed at 236.85, so just below it, but we're back above that now. That says that could have been a false breakout. Its price target is in the 246 level. First 244.28 is going to be the number that we should see Apple rally up towards. Now, it's only day one of its rally out here, so no reason for it to not have a 2 to 4 day rally as it makes its way up to that level out there. Anything else that I could just not really. So let's do this here. Let's actually go see what's going on in the markets. I'm just back from a doctor appointment, so I truly am just seeing what's going on out here. Where is Stevie's day trading charts out here? Did I not put those up? Daily, week, day trade. There we go. Okay, so, we've got gold. All right, so let's start off with gold. What do we see here in gold and its rally? So the first thing is that it's the top of the profile that's acting as resistance right now. So you've got gold with a new profile. The bottom of that profile is at 26.46. The center is at 26.79. The top at 27.02. And so far, that is holding as resistance. You've got that TD9 count top. it's somewhat of it's not really a neutral signal because price is trading with inside its profile, but it's not exactly the most bearish of patterns out there. 5-hour time frame chart is just testing profile support out there. It was closed above that. 240-minute ran into resistance at the top of its profile. That 27.1890 level, we know that the sellers were there, so we know that's a key level resistance. Even on the 2-hour time frame chart, it has a TD9 count top. Price tried to take it out. It tried to take it out, but it ran into resistance at its breakdown level at 27.1860. So that is still in play out there. Just consolidating with inside its profile. TD9 count top on the 60-minute time frame. Now, the 60-minute time frame is trading below the bottom of its bullish structured profile. And that's suggesting that we could see price pull back to 26.8920 out there. The 30-minute time frame chart is trading below profile support. So, yes, pulling back to the 26.8990 level could be accomplished out there. How will we know if it's going to do that? The first level it's got to fall out here, and it's being tested right now, is this 26.9980. Below that is 26.9680, and then below that would be the 26.89. So that's your progression steps out there. When we take a look at gold, here's what we've learned. That price ran right up into resistance. That was set by the breakdown level of its 2-hour time frame chart, the top of its 240-minute profile out there. And right now it is trading with inside. It's trading underneath the top of that daily profile. So that's what's going on with Goldilocks. Let's go see what's going on with the NQ out here. We were talking about Apple earlier. So let's go see what is going on inside the NQ. This is going to take a moment to populate out here. How many moments, I don't know. But the NQ on a daily time frame. Oh, so this is good. So the NQ on a daily time frame formed that by the deep point pattern with that bullish hammer candle a couple of days ago. I would say if Apple's going to make that move quite a bit higher, the NQ is going to need to at least trade up to the top of its bearish structured daily profile. And that's in the range of 21,415 to 21,535 out there. The 5-hour time frame chart ran right into resistance as the 4-hour did at its TD9 count breakdown level. That's at that's at 21,372.50. In essence, that would be saying if this is just a counter trend move out there, which it could be because price has gotten up to that daily oscillator and change line. Let's open up. It's not as clear a signal. The oscillator and change line on it's not that bad on the daily time frame. We did see one close above it back on December 24th out there, that light trading session. But for the most part, this has acted as resistance. So right now, price has gotten up to resistance. If this is just a counter trend move out here, then in essence we start to see price turn down. So now let's go take a look at those other the intraday time periods out here. Let's start with where's the top? We've got a 15-minute top out here. But price would have to close below 21,275 to suggest that we want to move lower. I've got a negated TD9 count top on the 30-minute chart. That suggests that price wants to move higher. The 60-minute has no problem moving higher. The 120-minute has no problem moving higher. So it's really all about that oscillator and change line. And let's just call it the 21,372.50 level, which ties right out to those TD9 count breakdown areas for the 4 and 5-hour time frame chart up there. Only about 20 seconds before we go to break, but I'm going to go ahead and put the March contract for the ES Mini up on my screen out here. Even if we don't get a chance to take a look at it, those of you in the den that are watching my screens out there, you should be able to get a feel for where resistance is here. We're just trying to fill in the dots right now, that resistance being the top of its daily profile at the 59.90 level out there. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's get into the requests that have come in. First one, we're going to take a look at his ticker symbol QBTS out here. This is for Duncan and Steve inside the Tiger's Den. So, Duncan, when we take a look at the daily time frame chart out here, it's really the bottom portion I would take a look at first. We can see that yesterday was 4 consecutive days to the downside. Typical move, and today is going to be that little bit of a relief rally, right? It's just like running a race. You just can't continue to go one way or the other. Not that you can't, but typically markets don't do that out here. So you probably have a 1 to 2 day rally. Is that a bottom? I don't have a bottoming pattern per se out there. I don't think this is an A to B equals CD pattern to the downside. That looks like more than a 0.786 retracement out there. I could be wrong on that. Maybe you want to go ahead and check, but looks like really just probably a couple day rally. Now on a weekly time frame, you have a new profile that formed last week. Let me give you those numbers. 342 is the bottom of the profile. The center is at 542, and the top is at 642. So you have quite a wide range out there. We know that 642 was tested. In fact, it was tested today. Or close to being tested today. The actual high of the day today was 635. So price has gotten up to that resistance level and rejected it, and now you're back right at that green oscillator and change line out there. So just a consolidation on the daily time frame. Monthly time frame, just not enough data for me to really get a handle on what it's doing out here. And the daily still below profile and oscillator and change line support. So it looks to me like QBTS is just maybe a 1 to 4 day rally. Most certainly, probably a 2 day rally out there. So hope that helps you out, Duncan. Let's go on to the next request. This came in from Robert. Robert wants to take a look at what Robert's looking for is maybe like about a 2-week position inside the real estate sector or the banking sector, and he's looking at KLRE. So Robert, this did form a daily by the D point pattern, a Rhodes Momentum Indicator pattern. It did that 2 days ago with that nice big old bullish engulfing candle. You then had a new profile that formed yesterday. That new profile has support at 39.24 and resistance at 40.80. Well, today price gapped up. In fact, it's opened above profile at 40.80. We're now back below it. So we have to call this a daily Rhodes Momentum Indicator bottom with a consolidation with inside its profile levels. You would like to take a long position because this this is back underneath 40.80 out there. And we did have 2 days to the upside. This will be day number 3 likely. Maybe this is going to pull back and close the gap out there. And you've got the center of its profile. So the levels to perhaps be looking at, 39.79 would be one of them. That's that daily oscillator and change line. And then the high of yesterday could be another target at 40.11. Let's see what the weekly and the monthly chart tell us. The monthly chart tells us you have a solid D point top that formed out here, with price trading with inside its profile. So as long as 39.88 holds, I can understand trying to take a position on the daily time frame, because when you form a top, all that it really tells us is or suggests that price should go back and test support. If price holds support, that could be the extent of the move. And if we look at the weekly chart now, the reason I pushed that off was because we closed below weekly profile support last week. Right now, we're trying to get back into it out there. So I can't tell if last week's move was a false breakdown or not at this moment in time. But your question was to try to get into a long position here on a pullback or a retracement. And I would say, the 2 levels that I gave you for that daily time frame. You also wanted to take a look at the banking sector, the KRE. That's the regional banking sector out here. So let's see what it is telling us. It also formed a Rhodes Momentum Indicator bottom 2 days ago. Nice bullish engulfing candle. A new profile formed yesterday. Now, price is trading above. It gapped above that today. It's trading above a profile resistance at 61.56. So the regional banking sector, for its daily time frame, Robert, looks better than the XLRE, the real estate sector out there. Now, where would be the buy here? Are we even going to pull back out there? And that's a great question. And I'm looking at the intraday charts out here, and I don't see any signals that it's getting ready to pull back. Now, it has traded lower, obviously. Hello, Stevie. I just don't see the pattern associated with that. I'm going to put a 30-minute time frame chart up on my screen so you can see what I'm talking about. But maybe this will pull back. Maybe this will fill the day's gap. I don't know that out there. But since it is at least trading a bit lower, 61.56 would be the number. The price got down there and tested that would be the top of the profile out there. Maybe old resistance, which it was never tested as resistance, but perhaps that will become support out there. Also, because you've got a 3-day rally, maybe this is also going to have at least a 1 to 2 day pullback. So I go with the 61.65 level. On a weekly basis, the TD9 count top really did its work to the downside, in that it tested and rejected, for the most part, the bottom of that profile, which was at 58.68. Last week was a close just below that level, but we're back above it. So that says last week was a false breakdown. Now, where the real resistance level is out here, it's not really 61.56. It's on a weekly basis, it's the oscillator and change line, 63.65. Today we got up to a high of 63.56 out there, so not too shabby. So that would add to that idea, Robert, that you could see a retracement out there. Again, 61.56 being the likely logical number if you want to take a long position. Now, you also have to know you're talking about 2-week positions out here. None of these have proven themselves on the weekly time frame. You've got to get above that oscillator and change line out there. So I hope that helps you out. Always good to hear from you, and thanks so much for your request out there for both the XLRE and the KRE. We're going to go for GTE. Wants to take a look at FXI. And we take a look at FXI. It does have a TD9 count bottom pattern out there. I thought if you know your message, sometimes they're kind of cryptic. So hard for me to really understand exactly what you're asking for, believe it or not. Maybe a little bit more information might be a little bit easier for Stevie. But I think you said something like major bottom. I don't see that necessarily out here. What I do see on a daily time frame is a TD9 count bottom and price trading with inside its profile. So you've got support out here at 29.23, resistance up at 30.23 out there. If price can get above 30.23, 30.77 would be the next level of resistance. On a weekly time frame, things don't look very good here. In fact, you probably have a confirmed A to B equals CD pattern of the downside. The B point, which is labeled B on my weekly chart, part of the Chapman wave, November 29th, had volume of 113 million shares, and it was passed with 168. So you have in the FXI, you have a confirmed weekly A to B equals CD pattern to the downside. And that most certainly is saying that, no, you don't have some kind of major bottom inside of FXI out there. So that's suggesting over time we should see a pullback towards 25.89 out there. You have a consolidation with inside the monthly profile levels, 25.88 at support, and 34.92 is your resistance area. So you've got a 2-day, maybe this is a 3-day counter trend move. You do have that bottom pattern that is out there in FXI, but 30.23 is likely the extent of the move higher out there. And I hope that helps you out, and I hope that that answered your question. Doug and Steve wanted to take a look at Intel INTC as a ticker symbol. So we take a look at INTC out here. What do we know? What do we know? We know that it's trying to form a bottom. It's got a Rhodes momentum indicator signal that's been triggered. And really, maybe it did form a bottom. I see wave number 7, letter G out there. That was confirmed yesterday. So we're going with that 7th wave bottom with price inside its profile and above its oscillator and change line. What is likely to happen here is Intel suggesting it wants to rally up towards a 2022 level, maybe even as high as 2088. On a weekly basis, price is basically testing its Rhodes momentum indicator bottom-ish area out here. It's testing a swing point from back in September 13th that had volume of 287 million. So far, we're about halfway into the week out here with 113 million. So pulling back with decent volume out there. And the monthly time frame out here, I do not have any kind of a bottom signal. The TD9 count low was bar number 7 out there. So it looks to me like just a bit of a counter trend move out here for Intel, 2022 to 2088 being a sell zone out there. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. TFNN.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Let's move on to Micron. MU is the ticker symbol. This is for John C. inside the Tiger's Den. So we take a look at Micron. Here's what we know. The first thing you know is that price is trading with inside its daily profile. You've got support down at 95.42, resistance up at 104.48. It's trading inside a swing point that had formed out here, John, on January 7th. The volume on that swing was 53 million shares in the first 2 hours of trading. We've done 12 million shares. So you've got about 36 million going into 53 million. So you're moving to that swing point with light volume. This would be day number 2 to the upside. So likely you get a third day, and with price finding resistance at 104.48. If price was able to close above that 104.48 level, you'd have the next resistance point, which is coming from the weekly profile, 106.34. It formed a new profile last week, and support is down at 86.39. On a monthly time frame, which has got the TD9 count top, price closed below the monthly profile last month. We're back above it. Here's the real key level, and you can see this. You probably saw this immediately, John, when you were looking at my charts. Look at that oscillator and change line for that monthly time frame. That is really the key level. If you're long Micron, what you really need to see is Micron close above. Right now, it is printing out at 104.26. If it can do that, because that oscillator and change line is held as resistance for 2, 4, this would be month number 6. Now, maybe this month it fails and price closes above that. And if it does that, 104.26, then you got to take on the battle at 104.48 and 106.34 out there. So that's the real resistance level. Hope that helped you out with regard to Micron's charts. Phil wanted to take a look at Auto Nation. Hello, Phil. Nice to have met you for a second time. But see you at Tom's celebration of life, and you would like to take a look at Auto Nation. We take a look at Auto Nation. Nice rally this morning, running right up into resistance, which basically is its TD9 count breakdown resistance as well as the TD9 count top. So this forms a TD9 count top on the trading session of December the 4th out there. Price makes a beeline and forms a TD9 count bottom right at its breakout level of support, 166.28. You got to love the TD9 count breakdown resistance and breakout support levels. They're objective. That's the beautiful thing, is that we're identifying support and resistance objectively. You and I, we've been testing this system out for years now, and boy, does that really help us. So really, please learn that TD9 count system, even if you just joined Mastering Probability for a short period of time to learn it. Go ahead and do that. So price ran into the resistance level. Now it's also that TD9 count top that formed on the trading day of December 4th. So volume there, that's a swing point. 332,000 shares. So far today, in 2 hours of trading, you're up with 78,000. So that's about a 240,000 share day. So you could get a test and rejection on lighter volume. Does that mean it's going to bust into the downside? Only if price were to close below that swing point low from December 4th, and that's at 181.18 out there. So really a consolidation between TD9 count breakdown resistance and TD9 count breakout support. On a weekly time frame, you're trading above profile resistance out there at 175.33. All looks good there. But now it's really the daily that is controlling the price movement out here. And finally, on the monthly time frame, it has a wave number 7 top out there, but with price remaining above that oscillator and change line, which is good. It just needs to close above that at month's end out there. We need 2 consecutive closes to suggest that price should go rally out towards that high. That high, again, being from the month that we're taking a look at, by the way, is July of 2024. 9.4 million shares that month. So far this month, we're halfway through 3.1. So coming in with light volume out there. So I'm going to go with just a consolidation between support and resistance established by those TD9 count breakout and breakdown levels out there. Hope that helps you out, Phil. And as always, thanks so much for taking the time to write in. We got a request here from Hector. Hector and Patty want to take a look at the U.S. dollar index. So I can't do that here right now, Hector. And what I will do is Hector's looking for, Hector and Patty are subscribers. I will send you the charts that show you the support levels for the U.S. dollar index in detail, multi-time frame, after the show. What we will do, and I won't do it right this second, I'm going to put this down here right now because I might be able to just do this during the break, is we can, though, take a look at the euro, which is 57% of the U.S. dollar index. So we'll at least do that. But in the meantime, we're going to take a look at NVIDIA for HD. NVIDIA, it's just been in that consolidation that's not been established. It's been established by swing points as opposed to TD9 count breakout and breakdown levels or profile areas. So as we speak right now, the bottom of that consolidation, in essence, we got to just a few days ago, that is held. We're still below profile support out here, so I can't say that it's going to make a run for the top of the consolidation. What I can share with you is the next level of resistance, HD, is 135.76. That's the bottom of its profile. Above that, 137.08. Above that, 139.62. That's the center of that daily profile. And finally, profile resistance at 143.48. That is not the top of the consolidation pattern, but you just got a good old-fashioned consolidation, which usually frustrates people out there. And you can see that consolidation on the weekly time frame as well. Weekly time frame, the bullish thing about NVIDIA is even though it's got a weekly TD9 count top, which is established 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks ago, it's led to a sideways move, and price has not even been able to close below the top of the profile at 131.60. So, is this distribution up top here? I don't think so. I know you got that guy on TV telling you that NVIDIA is going to just crap out and to buy Arista Networks out there. He's saying buy Arista Networks out there, and I took a look at those charts yesterday. It looks to me like Arista Networks is topping, not bottoming. In any event, let's stick with NVIDIA. And on the monthly time frame, you've got a Rhodes Momentum Indicator top. That went ahead and formed last month with that bearish engulfing candle. So your really significant level of resistance inside of NVIDIA is 152.89 out there. So that's what's going on there. You also wanted to take a look at ticker symbol OKLO. So let's go take a look at Oklahoma out here, which is trading above the top of its daily profile at $26.11. So close above that today and tomorrow. Well, you likely head up towards its Rhodes Momentum Indicator top. It was a three-river evening star that form that pattern. So likely going to go gun for, as long as it stays above profile resistance, 26.11 at day's end, likely gunning for the range of 28.28 to 31.91. That's really supported by the weekly time frame chart out here. Weekly time frame has no top. Trading above profile resistance and its oscillator and change line adds the idea of moving higher, and so too is the monthly chart. Monthly chart is trading above profile resistance and its oscillator and change line. So I would say as long as OKLO can stay above 26.11, you're likely to get a further rally out there. And finally, Dennis in West Palm Beach wanted to take a look at Netflix out here as we put up those Netflix charts. And how about that golf stadium that Tiger built down there at Palm Beach Community College? I don't know if any of you watched that last night. It was the second week that it was on. But anyways, I'll tell you what we're going to do here because we're going to a break. But Netflix was trying to form a TD9 count bottom pattern out there, and it was negated yesterday. So we don't have a bottom on the daily time frame. We don't have a bottom on the weekly time frame, and we don't have necessarily a bottom on the monthly time frame. It looks to me like what Netflix wants to do is pull back towards a 753.94-ish level out there. Steve Rhodes with TFNN will finish. Take a look at that. We'll get back to this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We were looking at Netflix before we went to the breakout there. So from a bottoming pattern, I don't see a daily A to B equals CD pattern at all. Maybe this rally that's going on is going to set up a C point. Can't say, but it's trading below profile support at 874.18 out there, and it negated its CD9 count pattern in one day. That usually tells us, which was yesterday when it negated that signal, typically tells about a strong momentum move to the downside. And that would suggest targeting 756.27. That's its breakout area. Again, we're below weekly support. This could be week number 2 on a weekly basis. You've got a TD9 count top. That suggests lower price. So that opens up the door for 677.88. And on a monthly time frame out there, there's probably a large A to B equals CD pattern. Let me just open up the monthly chart and make sure. And sure enough, there is. And so that was confirmed. And when I say that was confirmed, a sell the D point top was confirmed last month when we got that little bearish shooting star candle. And usually bearish shooting stars either work or they don't. Meaning that they either have follow through immediately or they don't. In this case here, it has follow through immediately. So that really opens up that door for that 753 level out there. So the daily, weekly, and monthly charts for Netflix are pointing to a move lower out there. That doesn't mean you can't get a 2 to 4 day rally out there, but longer term, Netflix looks like it wants some lower price out there. So Dennis, I hope that helps you out. And as always, thanks for your request out there. We have a request to go take a look at, Hector had asked about the US dollar index. I said, let's go ahead and cover the euro out there because it's going to give you a pretty decent feel for what the euro is doing out here. I'm going to start with the monthly time frame chart. Actually, I'm going to start with the weekly time frame chart. The reason I'm going to start with the weekly time frame chart is because this had a TD9 count pattern in here, and that was formed in November 22nd, the week of November 22nd out there, and that pattern was negated the week of January 3rd. And that tells us about a strong move to the downside. When we take a look at the monthly time frame chart, we're trading below last month's low out there. So that just adds to the idea of a further move lower. I believe where price is going over time is going to go target that anywhere between the 0.95 level to maybe 101. but I think more likely the 0.95 level out there. Now, on a day, and disregard these profiles out there, if you take a look at the daily time frame, we did get a nice Rhodes Momentum Indicator bottom, that bullish hammer candle. Yesterday's candle session then created a three-river morning star pattern. Do we need that? No. So where's price likely headed to? Look, that yesterday was just one day of a relief rally. If we don't get a second day, it just shows you how miserably weak the euro is out here. Let's just open up the daily time frame. You take a look at the rallies out here. Other than a 4-day rally back on the trading day, or back between October 31st and October 28th out there, all rallies have basically been 2 days out there, 1 day or 2 day. So the euro is likely just to rally, even if it does close above yesterday's high, for a second consecutive day. If it can't do that, just tells you about the weakness out here. So longer term, and the yearly chart is also, I don't have the yearly chart out here to show you, but longer term, the euro is headed lower, King dollar is headed higher out there. But I will send you those charts at some point in time, early afternoon after the show out there. We've got a request to take a look at Lululemon. So I'm going to go back to this chart. It won't take as long, I hope, to populate now because I don't have the daily intraday stuff out here. LULU. And that's coming in from Steve. Oh, there was a request to take a look at the GDX. Let's take a look at Lululemon out here. LULU. Steve, the VIX is back above minus 10%. Initiation move canceled. Okay. Yeah, I don't have the. Well, I can go back. I guess I can't take a look at that. But what Dan inside the Tiger's Den is mentioning, and I show that more on my black background charts out there, is that if the VIX at day's end has 1 day rate of change below minus 10%, that typically signals that it's initiation to higher price out there. So that is what Dan was referring to inside the Tiger's Den out there. That's an end of day thing, so I want to take a look at it. But we take a look at Lululemon out here. It's consolidating or trading sideways, I should say, on the daily time frame chart, above profile support, but below the oscillator and change line out there. So I don't have a real clear picture. It's not bearish, so to speak, other than it's got a TD9 count top. So it's got that TD9 count top that actually went ahead and completed on December 6th. Price has to take out that high. That's at 409.70 in order to negate that signal out there. The weekly chart could be setting up a Rhodes Momentum Indicator top out there. All it needs a bearish engulf or some type of bearish reversal candle at a week's end out there on Friday. Right now it's a bearish engulfing candle. If in fact that forms out here, this is again on Lululemon, we should see a pullback towards a 344.60 to 351.64 level out there. Monthly chart not providing us with a ton of information out here. We have had 5 months to the upside out there. We have seen this do 7 months to the upside. But right now, the daily is TD9 count top, and you might get a weekly Rhodes Momentum Indicator top, and both of those would then suggest that we should pull back. Again, the target area, I'd say, initial target area to the downside, the 351 and change level out there. AT&T is a request. Let's put T up on here. This is from Guppy inside the Tiger's Den. You're looking for a long-term entry, and where is support and resistance? So we'll get that to you momentarily. You can see that AT&T formed a bottom yesterday. That bottom was the TD9 count bottom. That was that nice bullish engulfing candle. It also formed. That was helpful. You've got a bullish structured profile. And so what AT&T should do is at least rally up to the top of its profile. The top of that profile on the 22.28 level. On a weekly basis, we closed below profile support last week, trying to get in it this week. In order to do that, you need to see a close above 22.01 at week's end out there. And on a monthly time frame chart, I do not have any kind of a topping pattern out there. The chart looks bullish. It's really now being controlled. Now, the daily was controlling things. That's what topped first. Well, really, the daily and the weekly did the same thing. The weekly had a wave number 7 top. The daily had a Rhodes Momentum Indicator top, then an A to B equals CD pattern to the downside. So it also confirmed to buy the D point pattern yesterday. And your question was looking for an entry point. So the entry point really would have been this morning, if you will, out there. No idea whether price is going to be able to take out that daily oscillator and change line. That's going to be a resistance level. You're looking for a longer term entry out here, and we just don't have that signal just yet. Really need to see if price on a daily basis can take out that daily oscillator and change line. Because if it can't, then really what's being signaled to us we should see AT&T trade a bit lower out there. Finally, there was a request, and Stevie just bypassed it, to take a look at the GDX. Was it here that I put it? Yeah. So we take a look at the GDX. There's the good and the bad and the ugly. The preference here for the GDX was not for it to gap up the way that it did. And the reason is because yesterday was bar number 8. Today is bar number 9. The only way a TD9 count top doesn't complete is if price is able to close below 35.26 today. Otherwise, you have a TD9 count pattern that's going to form today, will complete tomorrow. Means you still can get higher highs tomorrow out there, but looks like that's getting ready to perhaps pull back and test support. Could be 35.91, could be 35.25, could be the 34.96 area out there. On the weekly time frame for the GDX, it doesn't have a buy the D point bottom because it hasn't made that full move. If I draw in that A to B line out there, you'll see when we attach this to the C point out there, nowhere near made that full move to the downside out here. Right now on a weekly basis, you have price that is trading with inside its profile. Support at 35.72, resistance at 38.60. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So courtesy of Tom will be one's favorite time frame chart, the 10-minute time frame chart for the ES Mini. You can see that we are in bar number 9 right now. This candle is going to complete at 12 noon. At 12:10, you'll have a completed pattern. So if the ES Mini is going to rally, you've got your first bottoming signal here. That first rally ought to take us up towards 59.68, above that 59.79, and above that 59.87. Now, what you want to monitor this is whatever the low is by 12:10, the price closes below that low, tells you you've got further downside move out there. We had 2 more requests that came in during the break. Let's go take a look at that. First one from Mohammed is the CME. On a daily time frame, price is trading below profile support. It's trading into a swing point from January 7th that had volume of 2 million shares so far today. You've done 993,000 shares. Price is pulling into it. Looks like it may be getting ready to set up an A to B equals CD pattern to the downside. Don't know if it will do that, but a close below the low from January 7th out there at 224.62 would in fact do the task of creating that A to B equals CD pattern. You're trading below profile support on the weekly time frame. Of course, you are on the daily. That increased the odds of a further retracement. The further retracement would likely be back to the 221.80 level. Here we can see we had a nice TD9 count bottom on the monthly time frame. Price rallied and made a nice A to B equals CD pattern. I don't know if it actually completed the one-to-one move. Looks like it might have. But more important, went ahead and ran right into resistance at the top of that profile out there. Your second request, I don't want to get too carried away out here, was to take a look at ticker symbol BMRN. And here it's doing really the same thing. Right now, this is headed for a Rhodes Momentum Indicator bottom pattern from November 19th on the daily time frame. It was only about 1.9 million shares. Today, so far, you're pulling back with 783,000. So it's pulling back in that level with volume likely to go test the 61.15 to 62.03 level. Wave number 7 on the weekly is testing that swing point. That had volume of 7.8 million. So far in the week, about halfway through, you're 3.7. So you're pulling back with volume there, and the monthly chart looks ugly. Folks, have a wonderful Wednesday. Thanks for all the requests and staying with me, and I'll look forward to seeing you tomorrow on Terrific Thursday. Take care and be safe out there.